Hello, hello, hello. Welcome to Al Stock Trades. In this video, we're going to go ahead and take a look at and do a mega analysis for Clover Health. We were able to update the brain machine with the information here for the last quarterly earnings for Q3. We're going to do the intrinsic value, and we're just going to go ahead and do a pH spot check. So if you stick around at the end of the video, you're going to come out with an understanding where things are at and maybe come out of it with a little bit of wisdom. So if you like and enjoy this video, definitely hit a like and a subscribe. So let's continue. So overall, right now, what we are looking at is the income statement for the gross profit. Hey, yo, how you doing? How you doing? If you look at 2021, Q1, Q2, Q3, and Q4, you can see these are color-coded. The yellow is obviously the Q1s. The blue is Q2s and etc. And it's just, this is these four are a subsection of 2021. These four are a subsection of 2022, and these are a subsection of 2023. Obviously, we're waiting on Q4, right? So as you can see from 2021, we went from -7 gross margins, -7% to 1% to 10%. Okay, you can see the progression of gross margins, meaning that the company is aiming itself to profitability, regardless of what the stock price may be doing or what retail investors, aka, my apologies if this offends you, dumb money, which is the accurate term of what Wall Street uses to describe retail investors. Q2 went from -11% to -1% to +15%. Q3 went from -2% to +2% to +3%. And then Q4 went from -2% to +1%. And then now we're going to see what's going to happen with Q4 of 2023. Now let's go ahead and go to the statement of cash flows. We do the same thing. I didn't quite bother looking at here. I just want to go, I went from the analysis of 2022 subsection to 2023. In Q1, we went from negative. Again, if there's an open parenthesis, it means negative in accounting and finance for those that remember, if you've taken some courses, right? So 57 is, so -57 million to +78 million. Q2 of 2022 went from -39 million to +52 million. And then Q3 went from +101 million to -19 million. So that's why I was like, okay, a little bummed out on the Q3 side here. But again, success is not a straight line. It takes zigs and zags. But overall, the management's efforts, and interestingly, if you can see here, the former CFO to the Scott CFO, you can see there's a dramatic improvement within the income and statement of cash flows. Hopefully will transpire into stockholders' equity and book value when they become not only EBITDA positive, but net income positive. So overall here, what we're looking at is I totaled Q1 to Q3. So I totaled these three here. And so I went ahead and totaled them, subtracting out Q3, and I was able to get a free cash flow of 112 million. Now, if you don't recall us doing this calculation way back when, I said if we take 2100 and if we multiply it by 5%, so let me go ahead and just do this here on a new sheet here real quickly. So if we take 2100 and multiply it by 0.05, which is 5%, and you take that multiplier, you get $105 million, right? And people said, oh, you can't estimate free cash flow that way. Well, yeah, you certainly can. So is Clover free cash flow positive now? I don't know, because last year in Q4, they turned out to have negative $1,213 million in free cash flow. So for Q4. So with the CMS payment going back, we're going to have to see, but they might be at free cash flow negative this year, but instead of 200 million, it might just be 100 million, negative 100 million. We'll see. And what this is showing you is they are going, again, if you total this out, they're literally, especially if you go down to 2021, they're moving to free cash flow positivity, which basically tells me that in 2024, they're going to be free cash flow positive, right? And if we were to just estimate, because we already know we had a great, Q1 and a great Q2, and we had a garbage Q3. If we were to estimate these, right? And again, when I say garbage, I'm being a little harsh, right? Again, I'm just being a little harsh, right? They beat, they beat, right? So I'm just, again, I expect perfection, right? But again, you don't have to, right? So, total free cash flow is 112 million. And so what we did, so we went ahead and, input this in our intrinsic value calculation, and we grew it at 15%, with a 2% perpetuity rate, divided by the number of outstanding shares. And we get a recession level of $2.27. Now, if you go ahead and look at all the stocks that, trade in the stock market, they're really not trading at the recession level. I mean, some of them are barely even trading at their bear level. They're literally trading a little over their bear level to their bull case, right? So with this regards, I'm very confident, when I put a title that says, hey, you know what, my projection is definitely greater than $2, right? Which, if you go ahead and look at that, that's a 141% increase. That's literally more than doubled your money just from at these levels, right? So this is where we kind of get into this analysis where we say, the stock market is a device for transferring money from the inpatient to the patient. And, normally I would not be making these videos. I mean, you saw my energy transfer video to my, uncle-in-law. I had no energy and really incentive to make these videos. I could just keep this to myself and just, do this and make money and go along my way. But again, I want to make all tides. I want to raise all tides here and be able to help the retail community space. But, it's starting to get to a point now where we're getting at a level where, this is pretty easy. You don't have to be a genius to understand that, this is a winning trade here, right? Winning investment, trade, whatever you want to look at it, depending if you're even longer than these price targets or not. But overall, they are going to become free cash flow positive next year. They're going to be EBITDA positive next year, but net income negative. If you don't know the difference, you should, learn. And then 2025 to 2026, they're going to be net income positive, right? Yeah, so I made a video about figs. I need to reinvestigate them. But just a quick little here about figs here. Yeah, we're looking pretty good here. I mean, we're again, the intrinsic value doesn't lie, right? So it's probably heading back to its value, whatever the value we placed in that video, right? So, I'm very excited with this analysis, and this is obviously, whenever you see stocks that are mispriced like this, it shows you that Wall Street is like, oh wait, this is a Hindenburg stock. Oh, this is a Chamath stock. Oh, this is and I actually like this because it makes me happy to know that there's market efficiencies that I can take an opportunity on, just like how we took an opportunity on Enphase. Just like how we took an opportunity, let's say I didn't take an opportunity, but you could have taken an opportunity on Skin, which is a stock that's done really well because it basically, dropped. The market was relatively, for small caps wasn't really that well, but you could see you could have made 76%, right? So there's opportunities everywhere. So come to our platform, and then you can go ahead and do those due diligence, right? On the platform, because I get so many requests and I really want to do them all. I just don't have time. Sorry. Yeah, people keep making Chamath hit piece videos, so that's not helping. No, it's fine, because once it becomes free cash flow positive, money's money, right? You can hate him to the moon and back. If he's making you money, it doesn't matter. So that's all I have for you guys. Just a very quick shout out. This is it. In the next coming hours, the Black Friday deal, Cyber Monday is pretty much over. This is $1,000 off. So we're not really gonna, have these prices this low. So definitely take advantage. We have a record number of people joining, and I'm actually supposed to do an interview with Benzinga. I've been holding it off. I need to go ahead and do it. And I'm just really excited because we're building this beautiful platform, and I'm just with Bloomberg, Yahoo Finance, and the NASDAQ taking a look-sees at what we're doing and writing articles about us. I'm very, very happy to put my name on this because, this is a 20-year project for me, and I'm very excited for this. So, what time frame? Again, not personalized advice, is just my opinion. But again, I think this thing's going to become free cash flow positive in 2024. Given that there's no recession, I wouldn't be surprised if we see this in 2024, right? Just like how what happened with, Palantir, one never thought that it would go 200%. Again, this became net income positive, not free cash flow. It was already somewhat free cash flow positive, right? So, very excited for this, guys. Please take advantage of of this. Again, I'm not trying to make money off of you. You can do the math for yourself. No one sells lifetime access to Wall Street data. Go to Yahoo Finance, go talk to them. They're going to laugh at you out the door. I'm going to be a physician. I don't need your money. This is just a platform to be created to self-sustain itself to perpetuity. And I hope that we can create a group of like-minded investors that are again we don't want people that are just going to be like spamming and just a fixed mindset. We want growth mindset individuals because I love each and every one of my members, man. They are amazing. And what can I say? You're inviting people to come that have a passion for finance, that want to be able to do their own research, that, once they tuck their kids to sleep, they, go to their desks at night and they do their analysis and research companies and group together. And it's the American dream. So I made a video about SoFi. It's somewhere in the deck stack on YouTube. I first was not a fan of SoFi at $25 or whatever, 25ish. I said it was a sell. Then it dropped back down, and now I changed my analysis because again, I'm data driven. It's all about the data. I am data driven. I have the Excel spreadsheets. I have the ones and zeros, and I run by the ones and zeros, and I live my life by the ones and zeros, and I love it because this world is mathematically modeled, even to the level of your sodium, potassium, ATP, ACEs channels in your hearts and in your brains. 3 sodiums out for 2 potassiums in, right? Everything's mathematically modeled. All right, ladies and gentlemen, God bless each and every one of you guys today here. Let me see. He has been saying it was going to go up for years, but every time he talks about it, it then goes lower. Not too sure that what happened to today with... Yeah, I saw the 14 million volume. Our members on our stock terminal were saying that. So yeah, it's day by day. I live my life on the fundamentals, and I'm more of a long term. Don't know them, but definitely add them on to our group, and we all can do due diligence on them in the stock terminal. So definitely take advantage. I'm telling you guys, take advantage of this. Okay, stockterminalgpt.com or stockterminalgpt.com or allstocktrades.com. So take advantage. I'm just really excited, for this, and we're doing a damn good job. Need some short squeeze? No, honestly, I don't even think this needs a short squeeze anymore. I just think it just needs profitability, and then once it proves its business model, that's it, guys. That's it. All right, folks, that's all I have for you here. If you enjoyed the video, please don't forget to hit that smash button because, hit that smash button, right? Hit the like button, right? Smash that like button. Shows you I'm really good at this, right? And yeah, man, it's always good to help. And what can I say, guys? This is it's an honor and a privilege to be able to share with you this data, and to kind of show you that even in a recession level, you're still making double your money. So I mean, it's a freaking joke, right? So this is easy. Again, the biggest wisdom you could take from this video is the stock market is a device from transferring money from the inpatient to the patient. So for all the inpatient people that are selling, they will soon learn their lesson, and hopefully in the next bear recession market, they will learn and apply this knowledge. But for people that are here, it's an accelerated form of knowledge, which is what we like to do here. So God bless you all.